Boom, we are live, ladies and gentlemen. Thanks for joining us today. We are going to take a quick look at Bitcoin's price, gold, and the S&P 500. So let's just dive in. This is a much longer chart. Here's the daily for Bitcoin. Obviously on the far left-hand side here, we've got the bull market peak of 2021, its secondary peak right at the top of the pandemic as the masks came off, and then the subsequent downside. Now, for those of you that were here in October 2022, I was very, very bullish all the way back here, this nice area. And there is a lot of good reason for that, although, mind you, the good reasons are pretty devastating. If you go back and watch my videos talking about excess mortality and a whole bunch of unfun things, followed secondarily here by this movement in October 2023, the attack on Israel. I was screaming go long. This idea of buying when there's blood in the streets is a really hard sentiment to take into account, mostly because it's antithetical to the way most humans think. You kind of have to think a little bit like a sociopath and go, oh, if there's instability or violence or chaotic moments, those are the moments to be the most interested in buying assets and trading your currency. Every step out of there, actually, I thought this was kind of interesting. I was thinking about this the other day, is all the way back here when we were quite worried in October 2022, the things I was worried about, mind you, we weren't speaking about it publicly because we would get kicked off YouTube very easily for the stuff I like to talk about. But all the way back here, when I first started reading the real Anthony Fauci, versus where we are today, or RFK is now the head of the HHS, Health and Human Services, and Dr. Jay Bhattacharya as part of the lead of the NIH. These are all kind of bottom to top signals that I've learned over the years that have much less to do with market dynamics and a hell of a lot more to do with human psychology. And understanding that makes a big difference, I think, in the long term. But number one, from where we were in 2022 to where we are now is significantly higher, meaning the risk to reward situation for Bitcoin for the last little while has obviously been favoring risk, less reward. There's only so much upside. Now, the last videos I made, I'm aiming at around $150,000 to $240,000 Bitcoin. So is this cycle over? Now, here on the larger accumulation, the SOS and kind of backup phase, this looks like an LPS to me. I thought it would be. I was very, if you were paying attention in the private den, I wrote and I shared this chart, which is just another one of our horizontal trading ranges. And I had wrote, is this a spring or a sign of weakness? And I wrote that before we dropped. I knew we were going to have a drop here to around 83,000. This secondary move down to around 76,000 was quite a bit deeper than I originally anticipated. And this is why it says right below here, is this a spring or sign of weakness? When we're this far into the market cycle, it's much harder to call a top. I've been really good at being like, now is the time to buy. When is the time to sell has actually been a lot harder. Although gauging the sentiment of nobody had read the real Anthony Fauci to RFK is the head of HHS, I think these are kind of great reflections of where the bottom is and then where the top is. If only TO knows, that's probably the bottom. If everybody knows, that's probably the top. Now, is this the exact top? Could Bitcoin go higher? Yeah, there's reason to believe that we could. But again, the risk to reward scenario here doesn't favor either necessarily, not as in comparison to where we were in 2022 and 2023. But here I wanted to share some context I thought that might help as well. The purple line down here is the current Bitcoin bull market, and then the blue, yellow, and red are the previous Bitcoin bull market cycles. Down here are the dates: red 2013, blue 2017, and orange in 2021. And as you can see, we are well along the movement of what would be the regular Bitcoin bull market cycle. I still think there's room to go to the upside, probably in between the $130,000 to $250,000 range. It really depends what's happening at that point. I'm going to make a later video about why we could be in for some serious downside after this. But just remember, the risk to reward scenario is favoring risk, not reward here. Being able to manage the downside potential, I think, is really important here. And we had mentioned this when we got to the $100,000 area to begin with, that the move to the upside was equally likely as the move to the downside. Many of my stop losses in the altcoins got hit along the way. You can go back and watch those videos too. But here with Bitcoin, we try not to think too much about entering or exiting the market, and just that Bitcoin is going to be one of the better, longer choice assets, because all governments in all countries are going to continue to print currency, and therefore there's a very high likelihood of seeing massive amounts of inflation in the asset market itself, which is generally what we've seen over time. So just from this chart alone, it does look like there's more room for the Bitcoin bull market to continue, but again, the risk reward situation is not even. So if you're an investor, just keep investing on a monthly basis. Trading, I was taking shorts the last few months, kind of jumping in and out, enjoying some of the downside. But generally speaking, the moments of early 2022, early 2023, when I'm screaming, buy everything, like I made videos saying, just buy anything you can get your hands on, versus now, don't throw everything in the market right now. It doesn't make sense. Or then, like the last month, basically, even if we were going to go to 240,000 right away, it's 100% upside and equally likely 50% of the downside, which is basically the same thing in the market world. If you go down 50%, you have to go back up 100%. I know that doesn't sound like it makes a lot of sense, but that's how it works. So keep that in mind. The other thing, again, it was the Bitcoin value days destroyed. This is a nice multiple too. It takes a few different moving averages and the how long Bitcoin is being held in particular wallets into case. Now, here, pretty much every time we peaked out red was the kind of the finality of the bull market. We hit that back at around $66,000. I suspect we're going to get one more peak out here. Huge amounts of accumulation going on. And I also found this really interesting too. I did not realize how many huge companies have been accumulating Bitcoin. Now, clearly MicroStrategy at almost 500,000 Bitcoin, or $41 billion worth of Bitcoin in their treasury, and in a long distance behind them here, Marathon Digital Holdings at 45,000 Bitcoin at $3.7 billion. But I didn't realize how many companies were doing this. You've got Metaplanet here, a Tokyo-based company in Japan that owns over 3,000 Bitcoin as well. Semler Scientific, across the board, a lot of these are US or NASDAQ or publicly traded companies that all hold Bitcoin in their treasury instead of owning cash. They've all diversified away from the US dollar or T-bills or any number of the other assets, and they've put Bitcoin as one of their top holdings in their treasury. I think that's important to remember. Now, again, this list goes on for quite a while, with the lowest being Mogo here Inc., which is a Canadian listed company at 18 Bitcoin. But nonetheless, that's a large list of companies who have added Bitcoin to their treasury as a better choice for cash for them as well. The last things I wanted to do was take a look at the SP 500. I'm going to make a more dedicated video to that. But here again, we're finding weakness. The RSI looks like it's trying to turn up. We've bottomed out. The stochastic RSI is turning up. The MACD looks like it's trying to turn up. I think that we're going to get, I think we're going to get a bounce, at least to try to get back into the box. If we don't get back into the box, there's two other scenarios here that I think are very likely. Number one would be a reaccumulation after decline, which would be a secondary reaccumulation box. And we've seen this for Bitcoin before, actually all the way back in 2019, right after the pandemic started. So if you can go all the way back to my videos in early January of 2020, and I was short Bitcoin from around $9,900 all the way down to $3,000. I did quite well there because I was happy, knowing that, again, if Tio knows that there's a pandemic and nobody else knows, that's a great time to take the opposite side of to take the trade. And I think that's one of the things I've learned most here, is if I'm the only one that's talking about these things, or like of a small group of people, then the likelihood of me being right is very high. But as soon as everybody knows, the likelihood of a top or some type of finale to the market also is very high. So, but I want to point out this one here. This was a very specific move to the downside. I remember charting. You can watch the videos too if you feel like going back. But this was a secondary reaccumulation after decline before breakout again, which means that we saw a nice horizontal trading range that pushed down into a lower reaccumulation box and then broke out. So that's the second potential likelihood for what's going on. But again, the risk to reward scenario here, the volatility for day traders is super high. There's a ton of fun stuff if you're day trading to be messing around with. But in terms of do we go all in? No, this is not a time to be going all in. The time to go all in was almost 2 years ago. I made a video every single day being like, I'm going all in. This is not that time. I got stopped out a lot of my positions. I'm largely in cash. Some of the things that we're holding in the venture fund, we're just holding and we'll see what happens. Clearly my video game thesis was probably the worst performing one out of the last, 8 years of market thesis with you guys. And I'm young, so hey, we're gonna make mistakes, gonna learn, and that's normal. But again, is this a sign of weakness or a spring? I'm not sure yet. I'm not sure. On to the S&P 500 though. I think we're going to get a bounce here for the S&P 500 pretty shortly. On the daily, the stochastic, the MACD, all down and pointing up. I think we're going to get a bounce here in the next couple days, but that's going to be a really definitive moment. It'll probably be a definitive moment for Bitcoin as well. There could be more capital that's looking for a home, mind you, that's not interested in treasury bills, not interested in the volatility of the stock market, but something that's looking to alleviate the potential downside of if the stock market keeps going lower and they just start printing more money, then who's going to benefit the most? Chances are Bitcoin still fits at the top of that list. But nonetheless, I think the S&P 500 is probably going to give us something like this, and then it could come down a lot lower. And this is where things actually get really, let's say, I don't want to use the word scary. It's the wrong type of momentum. My long-term thesis has, since I started this channel, you can go back, I made a video saying Bitcoin's going to $6 million when it was at $200 fucking dollars. So we're a hell of a lot closer to that now than we were then. But the underlying principle was the same, is that, look, the stock market is only this high because they've been inflating the M2 supply massively. The whole time I've been making videos, they've been printing trillions of fucking dollars and flooding into the market, whether it's the US, China, EU, Costa Rica, Indonesia, it doesn't matter. They're all doing the same thing. They're printing capital and inflating the markets, and they're all doing it to each other, which gives some type of relative weakness in currency that you wouldn't necessarily notice because it's kind of chewed up by all assets in all places at all times. Nonetheless, when we look at this chart, there's been no real downside distribution for the S&P 500 since 2008, because that's when they started quantitative easing. In 2020, we saw this massive pump up another 100%, and in the last year, basically, as we were following the Chinese M2 as well, they've printed like 40 trillion yuan. Now, the US wasn't printing, but China was, and you can bet for sure that that money was finding its way into the US markets. But there's a lot of room for downside here. And we could be in for some massive economic turmoil to the downside. Now, that's not my bet. My long-term bet is, again, they're going to find a time, and when they do, they'll just start printing. But if they don't start printing and they let this massive deflationary wave take over, we could see all asset prices plummet, houses pricing destroyed. I don't think cash would do very well in that situation either. It's really hard to say. If you lose faith and confidence in the government and markets at that level, I'm not sure what relevancy cash has either. We could be in for a really weird ride. And I've talked about this many times before, that between 2020 and 2030 is going to be fucking weird. So keep that in mind. It means I don't know what's going to happen. But best case scenario here, they just keep printing capital and the markets keep going up. There's less people. CPI stays generally flat or low because not there's, anyways. The point of this is we're gonna have to keep a really close eye over the next 6 months, because this could take a wicked downturn here for the S&P 500. I mean, this chart is just horrendous, right? On the far left-hand corner, we have 2008, this little bit all the way over here. This is when the market was broken, and they're like, hey guys, everyone, the market is totally fraudulent and broken, so we're just gonna print capital and buy everybody out. And we've been high on monetary heroin ever since. And since that moment, I've been right. They've just printed and all asset prices have been inflated. And there could be a question of, does that end one day? Does the music stop? And what does it look like when the music stops? Anyways, this is a TO Talks Thursday this time. So every Tuesday and Thursday, I'm gonna make videos. Mostly market stuff, sometimes just sentimental things, but for the last 8 years, it's been mostly market investment ideas nonetheless. So I wanted to just give a quick little update and say this is not a time to be taking too many risks either to the up or downside. I've just been playing short-term potentials and enjoying the daily volatility. But at the end of the day, Bitcoin, I believe, is still the North Star and guiding light to this thesis, and will probably perform the best over this decade, given that both cash and ETFs have massive amounts of obscurity, lack of transparency. The clearinghouses that own the ETFs, like, you don't own those things. They can just as easily take it away from you. And that's what we learned from the Cyprus banking collapses. Hey, everyone who has over $100,000, we just took all your fucking money, but they can't take your Bitcoin. They can take your ETFs, they can take your cash. They've proven in the past they can take your gold. Bitcoin's a little bit harder to get out of your mind than the other ones. Anyways, just a quick little update. I'll be back Tuesday. And we're going to do a bigger deep dive into the S&P 500 and take a look at global market liquidity as well. So keep that in mind. Thank you guys all. Give us the thumbs up, comment, like, share, get other people to watch the video, all those fun things. This is Tio with the Arcane Bear. We'll see you again on the next one.